morning, everyone. Today is Monday, April 25th. I'm Marv Eisen of Timeless Dollar Trading Academy. And we begin the day looking at the economic calendar. And today, Monday, April 25th, there are no announcements scheduled throughout the day. So we move on to our morning news. And looking at the morning news, flags are in the red convincingly. U.S. 10-year Treasury is about where it ended last week. Oil is, let's see where our oil is. Oil is trading down a little bit, a little below 100. So that's definitely good, but it's still not going to be reflected at the gas pump, as you well know. So let's move along to our charts. So this is the S&P Micro E-mini from Friday, April 22nd. And for those of you who listen to my Trading Zone reports and subscribe, the Trading Zone was indicated in this green rectangle, and the market started up here at the top of our Trading Zone and traded down to the bottom of our Trading Zone for the day, traversing 106 points. So the question of where to place your stop is the topic of my video today. I was watching a video over the weekend, someone on YouTube talking about where to place a stop, suggesting that his stop placement was at 3 points, and not that and it wasn't that he was suggesting that his stop placement was 3 points. It was that he was suggesting that with a stop placement of 3 points and trading the Micro E-mini, that only exposed him to a 15-point loss. Okay, sounds great, right? For those of you who've ever tried placing a stop randomly, you know that that strategy doesn't work, right? Because it just doesn't comport with what the market actually does. This chart is a 3-minute chart, and there are 10 points between each horizontal line. So in a 3-minute period, you can see, look at any candle on this chart, and the candle is between 5 and 10 points in length. So if you place a stop with 3 points in mind, that you can only lose $15, and you're wrong, then you're going to be stopped out most of the time. So the idea of placing a stop has to be done intelligently. Now, the first thing you want to do in where to place a stop is time your entry and first look at the trade that you're doing, examine the trade. Think about the trade. Why are you making that trade? What is motivating that particular trade, whether it's a long trade or trade to the short side? And in a previous video, I suggested making a trade, placing a trade based on a trade setup. And there are 4 particular trade setups that I recommend. There's the gap trade, there's time and price, there's support and resistance, and then there's momentum. And so these are the 4 trades on which you can base placing a trade. I should say 4 trade setups. So assuming that you observe one of these setups and you place a trade, you hit your mouse, and you then set your stop. Set your stop intelligently in terms of how the market is trading on a minute-to-minute basis. Well, in this case, I use a 3-minute chart. I use longer charts, and sometimes I look at a 1-minute chart, but I use a 3-minute chart because it gives me a better view of the big picture. So place your stop intelligently according to how the market is moving during a short-term period, and I use a 3-minute period. The bigger question of placing the stop is, on what basis are you making the trade? As I reference these 4 trade setups. And also, there's a bigger picture in mind. And I use a trading zone that I calculate every day. And that trading zone is fairly accurate. I won't say 100%, definitely won't say 100%, but on days where it's accurate, it's over 75%. And the trading zone simply gives me an area where the market is likely to trade on any particular day. So here, let's say at the market open, well, this happened to be a trend day. Doesn't happen often. Trend days don't happen often. Usually the market goes up, the market goes down. But let's say you want to set it and forget it. You're one of those people that you just want to place a trade and, close your eyes and hope that everything goes well for you. So if you're one of those people, place your trade intelligently based on your observation of the trade setup, and then place your stop well out of the strike range of where prices are going. This particular trade here, right at the beginning of the market, this was a time and price trade because there was a definite move in one direction, followed by consolidation, and then a second move in the similar direction. So in a time and price trade, what we want to do is place our trade in the middle of the consolidation period. So you wait a while, you see where the middle of the consolidation period is, and let's say here it was 43.55. You'd place your stop well out of the possible consolidation. In this case, it's 10, 15 points. So if you got stopped out, 10 points is $50. But let's face it, in trading, $50 is nothing. And I'm just sorry to say this, but you really have to be observant and cognizant of the realities of trading. And so the possible gain was 30 points here. And you could pick up 20, 25 points realistically. Certainly, you'd be fortunate to get all 30 points. But your risk reward then, I'm saying that you should risk 15 points. Your reward is 30 points, so it's a 2-to-1 reward to risk. Unfortunately, that's the reality of trading. So where should you place your stop? Well, you should place your stop intelligently based on how the market is moving during a short term, in this case, 3-minute price period. Place your stop according to only after placing a trade that has a valid reason for placing that trade, which is the observation of the trade setup. And thirdly, and most important, for me, it's most important, I always want to know the main question to me of where is the market going today? And I use my trading zone calculation to observe that. Now, in this case, if I was placing my trade, knowing my trading zone, placing my trade and my 15-point stop, I would have made and gone home for the rest of the day and came back to my browser at 3-4 o'clock. Wow, I would have done very well, and so would you. So my trading zone, as you can see, prices were limited by the support at my trading zone. Again, my trading zone calculations tend to be pretty accurate. I'm going to make another video. You see what happened here at the end of the day. This is very typical on trend days, where the market trends down to a point, typically that point being limited by my support or resistance in the case of an upward trend, and then reverses for about a half an hour prior to the end of the day, and then boom, slams back down in the direction of the trend. I'm going to make a video on this because, and I'm going to reference, I keep my charts historically. I'm going to reference this on a number of trend days. So that's my video for today, April 25th. If you would like to test out my trading zone calculations, subscribe, and the first week is free. But it's a great resource answering the most important question there is in trading. Where is the market going today? And even more importantly, enroll in my e-mini trading course. So that's my video. Thanks so much for watching. Trade safely, use a lot of patience, and I'll see you in my next video.